City Union Bank, trust and excellence since 1904. City Union Bank, trust and excellence since 1904.
Hello and welcome to Hot Money on Bloomberg Quint Live, India's first digital live streaming business news service. This is the show which gets you a complete wrap of all the stocks that are buzzing in trade. I'm Darshan Mehta. Let's welcome our experts and TS Harihar of HRBV Client Solutions and independent advisor Sharmila Joshi join me on the show. Thank you to both of my guests for joining me. Today on Hot Money, we'll discuss the auto space. We'll ask our guest whether the recent trends in the auto space and the numbers that have come out, are they encouraging for a buy in auto stocks? Vedanta has actually fallen significantly. Is it the right time to start accumulating Vedanta, or is this Anglo-American corporate governance issue something that will make them avoid? We'll discuss in short two results that came out, SBI and Dr. Reddy's. Dr. Reddy's is trading at a fresh 52-week high post the numbers. And we talk about Piramal Enterprises. Again, the counter seems to be seeing a lot of selling pressure of late. So what do you make of Piramal Enterprises and its role in the NBFC space? So that's something that we need to talk about in today's space. Let's start with the first one, and that is the auto numbers. Auto numbers were decent with the numbers coming out from most of the auto numbers, and the budget also indicating that there was a lot of emphasis on the rural market, some bit of tax offs which can help basically some of the consumer names, especially the auto name. What should do with the auto name? That's something that we like. We'll ask our guest, Hari. Auto numbers, at least for Jan, have been decent. They haven't been bad. Growth has been seen, and in most cases they've come out with numbers above estimates. And the budget, of course, helping them a lot. Would you buy any of the auto stocks at this point of time?
See, I think there are two issues here. Number one, the Jan number actually looks a little good because it comes on the back of October, November and December, which were actually bad months as far as auto sales were concerned. So I think we need to look at it relatively. Top line, I think, is still under pressure. But what we believe is that with crude coming down and petrol and diesel prices coming down, the short-term dent that we saw on auto sales, I think that should kind of reverse and auto sales should get back to normal. But as you rightly said, I think the big story now is the budget. Now, there is a helicopter money being paid out to the marginal farmers. There is tax shops for the middle income and the lower income groups. I think all this is going to translate into demand. And in my view, the demand is going to be more at the entry level rather than at a mid or a higher level. So probably you could see two-wheelers benefiting substantially. You could see tractors because there's a huge gain for farmers. So I think it's going to be very, very limited entry-level autos that could benefit. I don't think the overall auto pack is going to benefit because probably a Maruti or Eicher are still very, very richly valued. So I don't think there is a great margin of safety there. But definitely two-wheelers, I think tractors, that is probably where you could see the action.
Which stocks then could, if you're saying two-wheelers and tractors, which are the better opportunities?
See, clearly, I think we would prefer a Hero Honda, which is more of a domestic play compared to Bajaj, because Bajaj is more of a 60% global play. So I think Hero Honda would be one stock to benefit. When we talk of tractors, I still think the most undervalued stock today is Mahindra & Mahindra, because I think Eicher has already shown a fairly large run in the last few years. So we would like Mahindra & Mahindra on the tractor space and Hero Moto on the two-wheeler space.
You meant Escorts on the... You said Eicher.
Sorry, Escorts, not Eicher.
Okay, what about you? What's your theme on the auto space?
Well, actually, very honestly, I haven't liked the numbers much. So I would disagree with you all there that I haven't really found the numbers very enthusing for January. I think that it is probably what Harihar was referring to, that you had a weak festival sales, and so the numbers look a little better. But honestly, I feel that now it is becoming more and more clear that first there is base effect that is playing out on most of these stocks, because you did see such a big expansion over this last year and a half, and now you're actually seeing real slowdown happening, because there is definitely less people buying whether it is a four-wheeler or whether it is a two-wheeler. I mean, we can argue, like Bajaj Auto, for instance, numbers look decent, but that came really from their exports. So that is not really the domestic story, and at the end of the day, the valuation is going to come on the domestic play. It's not going to come on what numbers they do on their export business. TVS Motors look decent, but it's coming, I mean, their sales are half of what Bajaj Auto or Hero Motors sells. So it should stay, in this range. Otherwise, then that's a really bad number for TVS Motors. And Hero Motor has been losing market share for the longest time. So if you look at it as a basket, it seems to be losing. Four-wheeler seems to be losing. Maruti, when you saw the number, I mean, their results, not the sales numbers, but the results. And they said that, this is going to be a challenging year. So maybe, you could see a little bit of you do see good election buying, etc., and that you could see a bit of a bump up because of that. But I'd really steer clear of this sector, almost every stock, except barring the few in the CV sales like an Ashok Leyland or something, and I'd wait for the numbers to stabilize, so maybe at least a couple of quarters.
Okay, but despite them correcting 30-40%, even still you believe that there could be more potential downside?
Not maybe downside, but I think they'll have to move sideways at least, because I think at the end of the day, what was also happening was that valuations were getting very fancy for this sector, because it was really one of those high growth sort of sectors in this last year and a half. So I'm expecting that to also rationalize.
Okay, so that's the view that's coming in on the auto space. Ashok Leyland is something that Sharmila said that she'll watch out for, and counters like M&M and Hero MotoCorp is something that Hari spoke about. The other stock we want to talk about is Vedanta. Now, obviously, it fell 16-17% in trade on Friday. It's down another 1.2%. Corporate governance issues or no, because what they've done is a structured product for taking out money from Kane and investing it into a company where the promoter has a stake. Their rationale is optimal utilization of cash. They say overseas they would have got 2 to 3%. Here it's much more, and until now it's an MTM gain. Whether this was the right thing or no, that's for anyone to guess. But what should one do with Vedanta after it's down 17%? Is this a worrying sign? Sharmila, is this a worrying sign what they did, or you believe it was fair? Kane is getting much more for what it's invested rather than at the end of the day it's a treasury operation which they've done, not to do with the core business.
So very honestly, let's not talk of fair, because I have not liked this company ever since they really merged Kane with themselves, because Kane was the company with money, and they merged it with Vedanta, which was the metal business and which was losing money. So I don't think they've really ever cared too much about whether it's fair to minority shareholders or not. And I think coming to this whole deal, I think it's a bit of a stretch in any case, whether it's a treasury operation or otherwise. So I would really just steer clear of Vedanta altogether.
Okay, so you don't like the company operations also, you think?
Yeah, absolutely.
Okay, what about you? What did you make of the deal? You think that it was unfair on the part of them to do for minority shareholders?
I think it was out and out a bad deal, because what they've effectively done is Vedanta UK has already been delisted, and then there is a company called Volcan which is essentially held by the family, and then they have a 97% stake in Vedanta UK, and then they take a stake in Anglo. So I think the whole deal literally, I would say, reeks of opacity, and that is not something that goes down well as far as the institutional shareholders are concerned. I think that's the what I call the corporate governance part. Even on the performance part, if you look at the latest quarterly results, I think the stock actually fell after they announced a huge fall in profits. And there is also a concern on debt. People are saying they got a 40,000 crores of debt, but there is 23,000 crores in the books of Hindustan Zinc. But we are not too sure whether they can use that money, because I think there has always been a debate of whether they can use the money or they can't use the money. If they can't use the money, that means 40,000 crores of debt is still a large overhang on a company where the price movements have not been too favorable. So I think even business-wise, we are not too confident. The only argument I can think of in favor of Vedanta is that the dividend yield is quite good, because the company has been typically a high dividend paying company. So the dividend yield is quite attractive, I think at 7-8%. So that is probably the only story. But I would agree with Sharmila, this is probably not a stock we would be looking at buying at this point of time.
Okay, so apart from this corporate governance issue, the fundamentals are also not something that helps you in the... Okay, fair view. That's the view that's coming in on Vedanta. Not the best of views coming in from our guest. The other quick synopsis on the two numbers that came out, Dr. Reddy's and SBI. So we'll discuss both of them. Dr. Reddy is trading at a fresh 52-week high post the numbers that came out. Decent set of numbers. SBI is down in trade. So what's the view ahead? Sometimes, and Dr. Reddy is cool off significantly from the highs of the day. It's moved into the negative. It was up over 2% in trade. But quickly, what's your view on the two large nifty numbers that came out?
I think both were positive. Let me just talk about SBI first. I think SBI, if you look at the growth in profits that came, almost 40% growth came from the NII, or the net interest income. So I think that is the good news. That means, number one, the NPA cycle is kind of bottoming out, and you're beginning to see a growth in credit and growth in profits because of that. So I think that is one good news as far as SBI is concerned. There are still concerns that a lot of the present problems, like the NBFC problems, selected groups still under stress, that could put some pressure over the next couple of years. But I would believe that considering SBI SBI size, those should be fairly small in terms of its overall assets. So, within the PSU bank space, I think SBI probably looks to be a very good bet at these prices. Coming to DRL, I think there are 2-3 interesting things about DRL. If you look at the latest quarter numbers, I think the growth came on the back of non-US. In fact, US actually degrew by about 9 or 10%, and the growth actually came from India, Europe, and all the other emerging markets. So I think that's a good sign. And currently, I think it gets about 38 to 39% of its total revenues from USA, and if they're able to reduce that to about 30 to 33%, I think DRL will have a much more de-risked kind of a business model. So we like DRL. I think even as a pharma stock, it seems to be reasonably priced compared to the other pharma stocks.
Okay, in the banking space, since you've seen a lot of these banking companies come out with numbers, at least on the PSU side, there are two things. Even if you see the numbers across the banking now, since SBI is out and the large private sector retail focused and the corporate focus are all out, I think it's the corporate focused retail banks that have grown the most, while their pressure still remains on the retail, your HDFC banks and IndusInd Bank. In this scenario, would it be wise for someone to start shifting positions from these private sector banks to these lowly valued PSU banks, since asset quality is actually started to show improvement?
See, I think when you talk of private banks, we have a concern over asset quality of certain banks. For example, I think ICICI Bank and Axis Bank are already well documented. I think we have always had concerns. I think IndusInd and Yes Bank have shown tremendous concerns in the last few quarters. So we believe that if you are into these kind of banks, you should probably get out and shift to SBI. I still wouldn't recommend getting out of a Kotak Bank or HDFC Bank and getting into SBI, because I think although these stocks are fairly richly valued, they at least are able to show growth quarter on quarter. So to that extent, I think you are safe in those stocks, but I would still believe if you're having an ICICI or Axis or a Yes Bank or IndusInd, I think it is time to shift to an SBI.
Okay, and just finally before I move on, Sharmila, on Kotak, will the concern of promoter shareholding, will that be a bit overhang, and will that continue to plague the stock? Because the count has not been performing. Will that continue to plague them?
No, I agree. Whether ultimately that PNCPS gets accepted, doesn't, I think that's still an overhang. But in my view, that's more of a technical issue as far as the company's core performance is concerned. Because the only worry is, I think if he has to divest the stake, there is a big floating stock in the market. That's probably the only thing markets are worried about. But I think that's more of a technical issue. I don't think it really changes the fundamental story of Kotak.
Okay, well, Sharmila, what did you make of the two big numbers, SBI and Dr. Reddy's?
So yes, I think SBI a definite thumbs up, because you saw good the sort of the bump up that you saw in the profits was really because of strong loan growth, and I think that's always a very comforting sign when you're looking at a bank that their loans are growing nicely, and that gives you better confidence in terms of things going ahead. Also in terms of NPAs, they seem to have sort of had a hang on things. So yes, I would completely agree that. Oh, by the way, they've got my name wrong. So, if it's trading at 1.2 times FY20 book, then I think it's one of the sort of cheaper PSU banks, and definitely I think it's worth a look. But I think these lingering issues will be there. I completely agree with Harihar that in terms of this NBFC thing that seems to be becoming a bigger problem. We just heard from SBI management that they have an exposure, sizable exposure to DHFL. Probably to Z as well. So that if they have an exposure to the names which are being discussed and in the problem, there could be the stock price could stay depressed in the near term. And to just sort of take on what you were talking about, choosing between the two, I would still put my money in private banks over almost any PSU bank, barring an SBI.
But even some of the larger PSU private banks also have exposure to Z or a DHFL. You think this sector itself will go through turmoil now?
Meaning NBFCs?
NBFCs, PSU banks, given what's happened with Dewan is out now, LNFS is out now, Z is out now, but there are hundreds of others which probably you never know when they will just start tumbling out.
Yes, and hopefully, I mean, this is something the private bank sort of correction started about 7-8 months earlier, and maybe PSU banks earlier. So it clearly shows that golden period where every NBFC price was moving up is over. Okay. Now you have to be very selective, and you have to also see what is it that whether it is real estate or what is the exact infra lending, etc. Because for instance, honestly, Z is not even a real estate company, but their problems have arisen because they lend to infra. So there's no way of knowing which are the companies which have these large infra. So all said and done, I still think that private banks have a better chance of recovering from these levels as compared to some of the PSUs.
What about Dr. Reddy's?
Dr. Reddy, again, good numbers, and I think, just to flip your argument on the other side, like, yes, it's very great, it's very good news to hear that that the growth has come in spite of slowing down in US numbers. So you can view it both positively and sort of negatively. Because at the end of the day, if your 30% business is still not showing really any great signs of recovery, how much more of a stock price expansion can you see from here in the stock price sense? So which is why I think now the stock is sort of fairly valued. I think great set of numbers, all that is very good, but probably I think now in terms of valuation it is fairly valued.
You're recommending any pharma stocks to your clients at this point of time?
Well, I was looking at Sun, but now in the light of all the news, I'm waiting for clarity.
Okay, so that's the view that's coming in on the two big earnings that have come out, and the last stock that we want to discuss is Piramal Enterprises. I think it's trading down by almost 2%. The last time I checked, it's down almost 3%. Again, analysts are now cautious across the board on NBFCs, because you've seen Piramal hasn't fallen as much as as your Devans as well as your India Bulls, but nevertheless it's more than a 30% correction that we've seen from the highs, at least for Piramal Enterprises also. While Piramal on its part maintains that its asset quality is extremely robust, and the loans that it's given to the developers is robust. The truth will only come out when either one when you come to see clarity what's happening on the real estate space. Are you cautious on Piramal? Is that at one time people were saying that Ajay Piramal could do no wrong, and the counter kept on from levels of 500, 600, 700, it moved all the way to 3,000.
Right.
Now people are questioning, since it's corrected 30%, and the entire, and it's also present in a sector where there is
precisely, so as a disclosure, I hold the stock. I'm not selling what I have, but the point is that completely what you said, that you are in a space which is in trouble. The whole real estate space seems to be in trouble, and you also have an exposure to a stock like a Z. So you have definitely exposure to to companies where getting money back will be an issue, or could be an issue potentially. So let's wait to see whether, though they've said, the management has come out and said that they're confident that they'll get paid back. I would wait to see the money come back really, to recommend the stock to anyone from this level.
Okay, because Piramal, at one point of time, people spoke a lot about the demerging of the healthcare business, but at the end of the day, it's a financial...
So they did seem to have money, and some of their projects seem to be growing. I mean, they are developing some large sort of real estate projects in Mumbai city, for instance. And so maybe their own, where their own projects are concerned, maybe there will not be, once those start paying off, problems will start improving. But, to the people they've lent to, I mean, at the end of the day, now we have two names and they have exposure to both the names. And so that is why there has been this overhang on this stock, which is why it has corrected, because people sort of sense these things before they really happen. That, okay, so they are in real estate. This is what is happening to the sector. So they have lent to these people. And in the case of Z, they have come out and said that we are very confident that the management will repay. But I would wait to see the money, as I said.
But to your clients at this point of time, you won't, and even you said you have personally, so if you wanted to buy, you would wait for a lower level on Piramal, or would you wait for more clarity? And if clarity on what do you want?
Yeah, exactly. And fortunately, I've had the stock for a really long time. So I also benefited when they paid out to investors when, they sold the healthcare business. So, which is why perhaps I'm so sanguine, but I really wouldn't recommend the stock to anyone at this level.
Okay, Hari, what do you make of Piramal?
Yeah, I think same story. Actually, what's happened in the case of Piramal is that, over the last 3 or 4 months, I think almost regularly Ajay Piramal has been coming on channels and saying that NBFCs could get worse. And I think not once, but I've at least heard him 5 or 6 times coming on popular channels and saying NBFC situation could get worse. There is a lot more of pain in NBFCs. I think the market is interpreting that as some kind of a signal that all is not well as far as the NBFC business of Piramal is concerned. So, and I would be cautious. And also, let's not forget, the group has a large exposure to Shriram, which is again NBFC. They have a large exposure to Z, and I understand they have an exposure to DHFL also. They have an exposure to a lot of, I would say, CD projects in and around the Bombay area. So I would believe that we need to be a little more cautious. Let's get some clarity on the actual asset quality. After that, I think it will be better to take a call on this stock.
Okay, so at this point of time, you wouldn't take it?
No.
Because I believe because I also read in one of the papers, I think he had said that expect one or two companies to go down. I think that was, if I'm not wrong, that was the statement. So is that not a sign of worry that the business that you are in is facing turmoil? And till a long time, I think Piramal didn't accept the fact that that there's something wrong in this sector. I think they finally started to open out Is that something that would concern you?
Yes, obviously when the CEO of a company starts talking about a crisis, there are 2 or 3 things. Either his company is in a crisis, or probably he knows a lot about some companies in the sector which are in a crisis. And we are seeing what's happening to probably a DHFL. We are seeing what is happening to Repco. Most of these companies which kind of borrowed short and lent long have got into trouble. We also seen ILFS. So I think this is, and India Bulls. I think India Bulls, I'm told, has a similar problem of borrowing short and lending long. And the stock is down from about 1,800 to 600. It's a huge fall. So I think there is a concern over all these things, and probably I don't know. It could be probably we are overplaying the concerns, but I would believe that till the time there is clarity, it is always better to stay off. And as you rightly said, when it comes from the CEO or the promoter of a company, you've got to be extra cautious because he obviously knows the industry much better than anybody else. So I think what he's indicating is that there is a big churn happening. And the last churn I remember in NBFCs was back in 1998, when they brought out the capital adequacy norms. So the number of NBFCs in India went from 40,000 to 2. So that was one of the biggest churns I think we saw in NBFC. So I don't know whether it is going to be so bad, but definitely I think when people like Ajay Piramal come out and start talking, there is a certain concern that something is wrong with the sector.
Okay, so that's the view coming in on Piramal Enterprises. Not everything is right. The numbers also showed that, and the commentary also did indicate the fact. And our guest here also believe that right now is not the right time to start accumulating Piramal Enterprises. But we'll move on to an interview. But thank you so much, Hari, for joining in. Thank you so much, Sharmila, for giving us the view. But before we wrap the show, V-Guard reported a mixed third quarter number. Agam Vakil caught up with the managing director Mithun Chittapalli to analyze the earnings and his outlook for the next quarter. Let's listen into the slice from that conversation.
Hello and welcome. This is the earnings special on Bloomberg Quint. I am in conversation with the Managing Director of V-Guard Industries to take stock of the quarter gone by and what we can expect going forward. We have with us right now Mithun Chittapalli, the MD of V-Guard. Mithun, thanks for taking the time out and speaking to us on Bloomberg Quint. Let me start by asking you about how you are assessing the quarter. So while there has certainly been growth in the top line, there certainly has also been some miss when it comes to margins which have actually contracted. What is your assessment here?
So yeah, we had a reduction in margins. There has been an overall reduction in gross margins, primarily driven by a few factors. One is that in the case of house wiring cables, a good part of our business comes from Kerala, and post floods, the construction activities in Kerala have not picked up to the levels at which it is supposed to have picked up if you compare it with last year. So that is have put a drag on both pricing and margins in this market. That is one. Second is definitely we had a very inflationary environment starting from September, October and November for commodities. So a lot of the commodities what the products we sold in Q3 were manufactured using a very high commodity price that was prevailing at that time. The good news is the commodities since then has corrected. So a lot of this should reverse back in Q4.
Okay. So Mithun, since you already spoken about commodities, if you could tell me a little more about this reversal that you are expecting in Q4. That means that can we expect an uptick in margins at least on a sequential basis perhaps, and thereby if you compare it to the quarter in the last year, can we also see at least at par margins then?
Yeah, I think we'll see two things. One is that last year we had an extraordinary spend on advertisement and promotion related to the brand relaunch, which will not be there this year. So definitely the margins are going to look a lot better. But even otherwise, gross margins are also going to be better because two things. One is the commodity prices have eased since the peaks. And most of the even rupee has strengthened a bit from 75 to 72 or 71. So definitely these will help, the gross margins in Q4. So definitely gross margins in Q4 should look a lot better than Q3.
Okay, Mithun, then let's talk about electricals specifically because, I'm looking at electronics and consumer durables, and with respect to growth, the numbers look good. But electricals is where we're seeing a little bit of, subdued growth, if I can put it that way. My question then is that if you're saying that some of these, variables were because of one-off, problems with respect to Kerala, then can we expect a reversal, perhaps an improvement in the next quarter when it comes to the electricals business? Or is this something which is industry related and there is a genuine slowdown in the industry?
So definitely, you know, we have two large categories in electricals. One is the pumps and motors business and the house wiring cable business. The house wiring cable business, we are expecting it to pick up again in Q4, you know, with activities gaining steam. The pump business also we are expecting to do well because, you know, we had very high rain, you know, start of the financial year, which meant the prevailing water table, especially in the southern part of the country, was very high. The demand for pumps have been very muted. But I think Q4 onwards, we are expecting good demand because rains have been, you know, expected to be less in the coming months. And there is going to be, you know, definite stocking by trade in anticipation of good summer. Last year, our summer season was quite poor, so our base is quite low. So definitely compared with last year, you know, we should do much better.
Okay, Mithun, while we do see tremendous growth in your consumer durables segment, again, margins are a little bit of a problem. Is this also a one-off? Can we start seeing some improvement going forward, or do you think that these problems can sustain for a quarter or two, or perhaps longer?
So yeah, part of the margins issues is what I talked about earlier, especially in durables. It's mainly driven by, you know, we have a lot of imported components in, you know, consumer durable part of the business. So when the prices, rupee rate went to 75 rupees, there was a definite impact. But definitely now it has, you know, eased to 72, so that's a big relief. Also, commodities like, you know, plastics, a lot of the cost is also related to cabinets and plastics, which is a crude derivative. And as you know, the crude prices have also softened. You know, if you're tracking crude prices, you will know that the crude prices have also softened from the highs of November and October. So definitely all this will help us in posting better margins in Q4.
Okay, Mithun, then my final question is, how do we expect, you know, the year to end based on the traction that you've seen in Q4 so far? And I'm not asking you for an exact guidance of sorts, but I certainly want some sort of indication about, well, perhaps the numbers on the top line and profitability.
So I think, you know, we were hoping to hit around 10% EBITDA margins for the full year. It may be a little bit difficult, so we will probably achieve a shade below that. As far as the top line is concerned, we are right now, you know, right now tracking at almost a 10% growth, which translates into almost 11.5 to 12% growth like to like. Because first quarter we also still have the comparison with the GST base with the non-GST base of last year. So definitely, you know, we should hit like to like growth of 12 to 13% for the full year is what we believe.
Okay, Mithun, we'll leave it at that. Thank you so much for joining us and taking us through the numbers as well as the outlook. Thank you.